Good evening, everybody. Matrix here, and here is my watch list for January 15th. Okay, so let's get right into it. Sorry it's so late right now. It's 2:30 a.m. Eastern Time. Anyways, let's take a look at the futures right now. We did gap up and we ran into the key resistance area of 2600. I also want to zoom out just a quick tad a little bit. 2600, it's basically a very key level on the SPY. It's basically the 260 on the SPY. Looking on the monthly chart, you can see that we are gapping up into this uptrend line here. So at this spot, it really depends on what it does. For the past few days, the SPY has been chopping around the futures as well. We are chopping around in a very, very tight range. Let's bring in the SPY here real quick. So as you can see, this is a daily chart of the SPY. For the past few days, we've been chopping around right between this 9 EMA here, the red line, and the 50 SMA, the orange line, and then we still have the little VWAP above. As you can see, I've marked off 260 right here, this first red line right here. So this is where we're gapping up to, okay? And this 260, 230 area, if I zoom out a little bit, this is the next area of resistance. So ultimately, I have marked off a resistance zone, okay? And we are coming right up into it. That kind of explains why for the past week, the market has been kind of pretty sideways. We are getting indecisiveness. We are getting bulls, getting a little bit worried that it might get stuff from here, but they are still trying to hold it up. And then we are getting the bears almost getting ready to hammer it in, especially what I've been talking about for the past few weeks is that it's all a big trap, and it's more about the smart money trapping all these buyers here, pretending that this is actually a bounce. Personally, I still think it's just a trap, and we are in a bear market. So we are gapping up into the 260. What I want to see is I need the SPY to make a decision tomorrow. Okay, we should be gapping up, and then either it fails right at the open, and then we'll see a nice hard pull back down to the low of today, maybe even more down to the 9 EMA, or we gap up and then rip right out of the gates, dip and hold this 260, and then it starts to grind up and over. Personally, I want to see a super gap, but I don't think that's going to happen. This resistance zone area, this is a very tough trading part, right? I personally would not want to trade this part at all until the SPY actually decides what it wants to do. I mean, once it breaks out, then we'll essentially have two things that happen. Actually, three things that happen, right? One, we could see a short squeeze. Two, we will see buying momentum coming in, buyers saying, hey, we've crossed the resistance zone, and they start buying, and this will ramp up, and then they'll test this VWAP right here, okay? Or we could gap up and then fail right away, chop some more, dip and hold, bounce back up, and then just chop around this whole zone the whole day. So tomorrow is going to be a pretty difficult day to trade. I would actually wait and keep my eye on the SPY, wait until it actually gives me a sense of direction, okay? With that said, I do have a few tickers on that I will be watching tomorrow. And since we are in a very choppy kind of state in the market environment, the SPY right now, I am just very glad that it is the start of earnings season. So starting tomorrow, we are officially going to start. We've actually started already today, but the really big names are coming up this week. So I'm very glad it's happening because with the earnings catalyst, stocks tend to be able to move not in accordance to independently to the market, to the SPY, right? So that's what I'm looking forward to, and I'll be looking for those earnings plays to pull through for me and have some follow through moves. With that said, let's get into the watch list. First up, we have CGC. As you can see, CGC is very overextended. It has ran yet another day. It basically started running once it broke out this 40 mark. Okay, and we are topping at this 43 level right here. So what I want to watch is, let me move the clock out of the way and zoom out just a tad bit. We have the high of day here at 43.50. Okay, so I want to watch this test of the high of day and see what it does. Since the whole market's going to gap up, I'm not sure if this is going to gap up with it. If it does gap up, then the more reason for me to look for a sell-off, because basically if you look at the daily chart, we have a gap up, dip, and run, and then a sideways dip and run and sell, and then sideways dip, run, breakout, and then rip, right? Now, what I think, or what I want to see is a gap up, because this is still holding strong. All the buyers are still in, and they're looking for a gap to sell into, like a big spike in the morning to sell into. And I'll be looking for the spike to short into, because they'll be taking profits. 43.50 is the first resistance I'll be watching. There's a lot of resistance overhead right now. Specifically, I'm looking at this green candle right here. Okay, if you take a look at the volume, this is massive, significant volume on this day, November 7th. So this candle will be a guide for me. I'll be looking at the opening price of this green candle. Actually, let's delete that. Okay, I'll be looking at the opening price of this candle, which is at 44.40. I'll be watching the high of today, which is at 43.50. And then I'll be watching the 45 mark, which is a key psychological whole number. And then there's the 46, as well as another key psychological whole number, and the closing price of this green candle. And then as well as the top wick of this green candle. So as you can see, this is actually 46.75. As you can see, we have a lot of resistance level ahead. Okay, so the more reason why any kind of gap up, I think we should be getting a pullback day and a sell-off day. I like it to pull back and test this 41.30s area. Let's see here, 41.30s. Is this the right candle here? The highs, yeah, 41.30s. Where does that relate to? Okay, so let's see if this dip holds. 41.30 is right here, right? More specifically, this is the price I'm more interested in. Okay, this looks like a support, but it could come down as far as right here, where the support line automatically came in at the $40 mark, right? I'll be looking for a pullback. The higher the gap, the better. The higher it runs, the better. Okay, as it comes into these resistance zones, I'll be watching and waiting for that backside and confirmation to short it back down, because this is just running a little bit too out of hand right now, and it does look like it needs a day to pull back and relax and just chop. Okay, so that's CGC. Next up, we have Citigroup. Citigroup is an earnings reaction from this morning. They announced earnings this morning, and basically the reaction is positive, right? Looking at the daily chart real quick, we have a key resistance mark right at the 50 SMA here at 59.50. I'm looking for that. Since the stock did close so strong, I am looking for a little pop at the open. So, and the futures are gapping up as well. So the SPY is probably going to take it gapping up. We have immediate resistance at 59.25. We have the psychological whole number of 59, but I think we're going to gap up over it tomorrow. Currently, we're sitting at 58.95, right? What I notice about Citigroup, though, I mean, if I'm going to zoom out just a few months, it's very rarely that Citigroup does have consecutive large green days with high volume, right? So this is considered a very big green day with significant volume. What I would be looking for is a gap up and gap up, a little rip and a fail. So maybe gap up above 59 here and then rip into this 50 SMA and then fail from there. So 59.50 is a key psychological area because it's the 50 SMA. I'll be looking at the $60 mark as well, which is a key psychological whole number. And basically this stock needs a pullback. Well, it doesn't need to, but I would think that it would pull back from the prior history of the price movements, right? I mean, just look at this alone, this massive green candle. The next day, it actually opened flat, pop a little bit, and just faded. So something like that would be nice as well. But I think we're gapping up. So let's see where the gap leads us to. And that's Citigroup or Citibank. Yeah. Next ticker, we have Facebook. Facebook, this daily chart looks bullish to me, right? We do have a bullish engulfing candle right here. Okay. The move up was it was a struggle and it was very slow, but eventually it did break out. So we did have 3 days of consolidation. So what I want to see is now a green day for Facebook. More on the ideas of a dip and run, but since we are gapping up, so let's see if we can gap up above the 146 area right here. If it gaps up above 146 and starts holding, it's basically straight rip out of the gates. Okay. However, if the 146 doesn't hold, if it gaps up, we should be looking for kind of like a pullback and then a dip and rip. So that's the thesis I'm actually going on. I'm looking for a dip and rip, and I'll be watching the 144.30s to 144.50s area as a support zone to hold the stock. Let's mark that off real quick. So that's kind of like my support zone. I like to see the stock dip, hold the support zone, and then rip back up. My target on Facebook. Oh, very interesting observation that I found. We have a gap fill. Okay. So this little gap right here from October 30th to October 31st. Let's change the color real quick. Also the transparency real quick. So I want to zoom in on this gap right here. Okay. Currently, let's go to where the stock is sitting at right now. Okay, so right now we're sitting at 145.50. Okay. I'm going to change that color real quick so we can identify it as we zoom out. Okay, just make it red for now. As you can see, we are very close to this gap. I think what Facebook wants to do is actually fill this gap before it fails. So that would be my target at 149, 148.95 to be exact. Okay. Fill this gap and then fail. That's what I want to see Facebook do. It's looking bullish. The top of this lip on this green candle, October 30th, is at 146.65. Okay. So let's kind of put it right here on the daily chart. Okay. So this is the gap I want to see. I want to see a gap up and then fill the gap and fail, or a dip and rip. The support zone I called out already at 144.50 and 144.30. I identify this as a support zone as it's basically broke out from it today. Okay, so prior resistance now becomes support. This is like the consolidation area. So a dip and hold around this area, I'll take it for a long. And targeting this high of day, first of all, which is coincidentally, let's see the high of day, 146.57. So very, very close to this gap fill here, to this bottom of this gap, right? What I think is it wants to fill the gap and then come down. So yeah, the idea is that it's a long day for me on Facebook. Next up, NVDA. NVDA. Okay, so it does seem like NVIDIA is running pretty strong, right? As every day comes in, we are getting a gap down, dip and rip, gap down, dip and rip. Especially today, this is a very pronounced gap down, dip and rip, right? Now that the market is gapping up, I think NVDA is going to gap up as well. The high of today was 151.50s. So I want to watch that. If it gaps up over this, I'm looking for a dip to hold 151.50s and then rip, right? However, there is a second thesis. 155 is a very key resistance mark here on the daily chart. I don't think the stock will get over 155 tomorrow because this is a very tall ask, right? The stock is a little bit away from the 9 EMA. It's run 4 days in a row. Personally, I like to see it gap up a lot, okay? And coincidentally, the SPY futures is gapping up as well. So if it does gap up a lot, I would probably want to take it out of the gates. Not just 155, even 153. Okay. So take a look at 153 here real quick. Yeah, I have it in my notes. 153, I marked off right here, this bottom red line. This is a key resistance area. And the reason why I picked it is if I zoom out to 2017, August 11th right here, you can see this is the exact bottom wick, 153, August 11th on 2017. This is a key area in my opinion. Okay, it's got massive relative volume, or sorry, massive significant volume on that day. Okay, so what I want to see on NVDA is a gap up to 153 and then a gap and fail. That's what I want to see. Kind of like this day on January 8th, where it gap up right here and failed and sold off all day, and I want to bring it right back down to the 145 area. Okay, so that's my idea on NVDA. And then we have MU. MU is it's very simple. I'm just watching the 35 area, which is a key psychological area. MU made a doji day today. Okay, a lot of stocks we see gap down today along with the market, and most of them are able to rip back up except for MU because it's really holding it down. You can see this 50 SMA here on the 15-minute chart. What I want to see is a cover pop back into the 15, and we'll see how it reacts on the 35 here, back into the 35, and then we'll see how it reacts at the 35, right? 35 key psychological area. If it gets back above and starts holding, we can long this, okay? There is a gap fill. So we can long this and try to fill this gap, all right? Yep, that's a very solid thesis in my opinion. I like the long if it gaps up and holds 35. If it gaps up and fail at 35, then we short it from there and take it down to the low of days, which is right about the 34.30 area, and perhaps bring it down some more to 34, right? So we are right in the middle of this range right now. Don't want to trade it until it gets to the extreme points of this range, just $1 range right here. I either want to trade from the 35 or trade from the 34, but that's it, nothing in between. And finally, we have ATVI. Activision, I really like because I like it for a short. basically, why I pick Activision is tomorrow it comes out of SSR, I believe. Okay, so SSR initiated from this day on January 10th. And then it was SSR here. Even though it dipped out the gates, it ripped back up because of SSR, in my opinion, and also an overreaction. And then this morning we had a gap down because the SPY futures were gapping down, and then it ripped some more because it was still on SSR. Tomorrow it comes out of it. Okay, we are right in the very key area of 4750, key psychological whole number, as well as the 48s. Okay, so just going to mark off the 48 as well. Another key psychological whole number. Okay. ATVI overall, this is the reason why it came down like this is because it had a really bad catalyst on it, and the reason why it's still not coming down, I believe, is because of SSR. Now, as you can see, the two areas that I've marked off is basically more like a gap fill. So once it gets back up to 48, I'm hoping it does because the market is gapping up. I'm looking to short it. I'm definitely looking to short it because it's going to come out SSR. And right here is my resistance zone, anywhere from 48 to 48.25. Okay. As long as it stays under this area, I want to short it and hammer it down. And I want to bring it back to, well, first target 47 and then 46.50 and then 46. Okay. Very simple plan. That's it for my watch list this evening. If you enjoyed what you watch, make sure you hit the like button and subscribe. Check out my video links for all sorts of plugs. For example, a link to my mentors channel, a link to my trading buddies channel, a link to my preferred broker with a discount as well. You can contact me and add me up on Facebook, Instagram, Twitter. Contact me on DM. I'll be looking forward to chit-chatting with you. Hit the like button, and I'll see you guys all bright and early tomorrow. Ciao.